Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 14th, 2024, and we're diving into BrightView's latest earnings report for the fourth quarter and full fiscal year 2024. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. BrightView, the leading commercial landscaping services company in the U.S., has just released its earnings, and there's a lot to unpack, from record Adjusted EBITDA to strategic initiatives for fiscal 2025.
Revenue and profitability overview. Let's start with the top line. BrightView reported a net revenue of $728.7 million for the fourth quarter, which is a 2% decrease compared to last year. However, the company has shown impressive improvements in profitability. John, can you shed some light on this?
Absolutely. While the revenue saw a slight decline, the net income increased significantly by 56.1% to $25.6 million. This was driven by a 3.5% increase in Adjusted EBITDA to a record $105.2 million for the quarter. The net income margin also expanded by 10 basis points, indicating effective cost management and operational efficiencies.
Segment performance. John, how did BrightView's different segments perform this quarter?
The maintenance services segment saw a revenue decline of 6.6% to $486.5 million, primarily due to strategic reductions in non-core businesses. However, the segment's EBITDA margin improved to 16.8% due to cost management initiatives. On the other hand, development services experienced an 8.6% increase in revenue to $244.1 million, with a significant EBITDA margin expansion to 16.9%, driven by increased project volumes.
Cash flow and debt management. BrightView has also made strides in cash flow and debt management. Can you elaborate on these aspects?
Sure. BrightView's net cash provided by operating activities increased by 58.3% to $205.6 million, and free cash flow surged by 81.2% to $145.3 million. This improvement in cash flow has allowed the company to reduce its total net financial debt by $133.6 million to $736.9 million. The debt-to-EBITDA ratio has improved to 2.3x, reflecting a stronger financial position.
EPS forecast and actual performance. Let's talk about earnings per share. Analysts had forecasted an EPS of 28 cents for the quarter. How did BrightView perform against this expectation?
BrightView exceeded expectations with an actual EPS of 30 cents, marking a 57.9% increase year over year. This beat the forecasted EPS of 28, which was based on estimates from 4 analysts. The strong EPS performance underscores the company's effective cost management and strategic focus.
Future outlook and strategic initiatives. Looking ahead, what is BrightView's outlook for fiscal 2025?
BrightView has provided a positive outlook for fiscal 2025, projecting revenue between $2.75 and $2.840 billion, and Adjusted EBITDA between $335 and $355 million. CEO Dale Asplund emphasized the company's transformation and its focus on prioritizing employees and customers, which positions BrightView for sustainable growth and value creation.
Key takeaways. In summary, BrightView has delivered a strong performance in fiscal 2024, with significant improvements in profitability and cash flow, despite a slight decline in revenue. The company is well positioned for continued growth in 2025. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing BrightView's performance.
Thank you to our viewers for watching. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on BrightView's performance in the comments below.